After knowing the basics of bonds, let us talk about how to account for bonds, including bond issues, interest payment, and bond retirement. Let's continue with the three examples above. Example 1. Bonds issued at face value. Bonds issues. In the first example, the bonds are sold at par value. The company receives cash of 1 million yuan. Meanwhile, the company has obligation to pay back the principal of 1 million yuan when due. This obligation is called bonds payable. Therefore, the company records the issuance of bonds as following. January 1st, 2015, debit cash 1 million yuan. Credit bonds payable 1 million yuan. Interest payment. The first interest payment is on June 30th, 2015, when the company would pay cash of 50,000 yuan. It will also recognize the cost of borrowing 1 million yuan for half a year, which is interest expense of 50,000 yuan. Therefore, the related entry is as follows. June 30th, 2015, debit bonds interest expense, 50,000 yuan. Credit cash, 50,000 yuan. The company pays and records periodic interests every 6 months until bonds mature. So we would record the same entry for December 31st, 2015, June 30th, 2016, and December 31st, 2016. Bonds retirement at maturity. On the maturity date, the company records its payment of principal as follows. December 31st, 2016, debit bonds payable 1 million yuan. Credit cash 1 million yuan. Example 2. Bonds issued at a discount. Bonds issues. The second example, the bonds are sold at a discount. On January 1st, 2015, the company sells bonds and receives cash of 965,355 yuan. Debit cash for 965,355 yuan. The company also takes on the obligation to pay back principal of 1 million yuan at maturity date. We credit bonds payable for 1 million yuan. The difference between the two accounts is called discount on bonds payable. Therefore, we record the issuance of bonds as a discount as follows. January 1st, 2015, debit cash 965,355 yuan. Debit discount on bonds payable 34,645 yuan. Credit bonds payable 1 million yuan. The discount account is a control liability account. It is the control liability account of bonds payable. In other words, the discount account would reduce the net value or carrying value of bonds payable. The discount account is deducted from bonds payable in the statement of financial position as following. Bonds payable 1 million yuan less discount on bonds payable 34,645 yuan is the carrying value of bonds payable 965,355 yuan. In this example, the company needs to pay back 1 million yuan when the bonds mature in 2 years. Therefore, the carrying amount needs to increase from 965,355 yuan to 1 million yuan over the 2-year bond life. We increase the carrying amount by reducing the discount as we record interest payment, as shown next. Interest payment. The company receives 965,355 yuan for its bonds. In return, it must pay bondholders interests semi-annually and principal after 2 years. The total cost of borrowing 965,355 yuan for 2 years is the difference between the amount paid and the amount received. The amount paid minus the account received is equal to the sum of principal and interest payment minus bond price, which is equal to 234,645 yuan. The company's cost of borrowing 963,355 yuan for 2 years is 234,645 yuan. We need to allocate the total cost of borrowing, a total interest expense, over the life of bonds. IFRS requires the use of the effective interest method, which allocates total bond interest expense over the bond's life in a way that yields a constant rate of interest, that is, the market rate at the issue date. Specifically, the interest expense for period equals the carrying amount of the bond at the beginning of that period multiplied by the market rate when issued. For instance, for the first semi-annual year, the interest expense is calculated as following. How much is the cash paid for interest of the first semi-annual year? Recall what we learned in the prior reading. Cash paid for interest is equal to the face amount of bonds times stated interest rate. In our example, it is 50,000 yuan. The difference between interest expense and cash paid for interest is the amount of discount that we amortize in the first period. The journal entry for the first interest payment is as follows. June 30th, 2015, debit bond interest expense 57,921 yuan. Credit discount on bonds payable 7,921 yuan. Credit cash 50,000 yuan. After making this entry, the discount account is reduced to 26,724. The carrying amount of bonds payable is also updated to 973,276 yuan. We could repeat the above procedure and get the following table. It shows the effective interest amortization of the company. As we can say, the interest payment is the same for each period because it is based on stated interest rate and principal, which are constant over the life of bonds. However, interest expenses increase across 4 semi-annual periods as the carrying amount for bonds increases from the issue price to the par value. Total bond interest expense is 234,645 yuan, consisting of 23,645 discount, and 200,000 interest payments. Over the 2 years, the unamortized discount gradually decreases to 0. Bond retirement at maturity. On the maturity date, the company should record both the lost periodic interest payment and the payment of the principal. December 31st, 2016. Debit bond interest expense 57,921 yuan. Credit discounts on bonds payable 7,921 yuan. Credit cash 50,000. December 31st, 2016. Debit bonds payable 1 million yuan. Credit cash 1 million yuan. Example 3. Bonds issued at a premium. In the last example, the bonds are sold at a premium. The related journal entries are similar to the example of bonds at a discount. Bonds issues. When the company issues bonds at the price of 1,036,295 yuan on January 1st, 2015, it records this transaction as follows. January 1st, 2015. Debit cash 1,036,295 yuan. Credit premium on bonds payable 36,295 yuan. Credit bonds payable 1 million yuan. In contrast to discount on bonds payable, which reduces the carrying value of bonds payable, premium on bonds payable increases the carrying amount of bonds payable. Premium on bonds payable is added to bonds payable account in the statement of financial position as shown below. Bonds payable 1 million yuan, add premium on bonds payable 36,295 yuan is the carrying value, which is 1 million yuan and 36,295 yuan. Interest payment. The company receives 1,036,295 yuan for its bonds. In return, it pays bondholders interest semi-annually and principal after 2 years. The cost of borrowing 1,036,295 for 2 years is the difference between the amount paid and the amount received. The amount paid minus the amount received is equal to the sum of principal and interest payment minus the bond price, which is equal to 163,705 yuan. We need to allocate the total cost of borrowing or total interest expense over the 4 periods in bond's life. Under effective interest method, the interest expense for a period equals the carrying amount of the bond at the beginning of that period multiplied by the market rate when issued. For the first period, the interest expense is calculated as follows. The amount of first interest payment is 50,000 yuan. The difference between interest expense and cash paid for interest is the amount of premium that we amortize in the first period. The journal entry for the first interest payment is as follows. June 30th, 2015. Debit bond interest expense 41,452 yuan. Debit premium on bonds payable, 8,548 yuan. Credit cash, 50,000 yuan. After making this entry, the premium account is reduced to 27,747 yuan. The carrying amount of bonds is also updated to 1,027,747 yuan. We repeat the procedure above and get the following table that shows the effective interest amortization of the company. As we can see, the interest payment is the same for each period because it is based on stated rate and principal, which are constant over the life of bonds. However, interest expense decreases across the 4 semi-annual periods as the carrying amount of bonds payable decreases from the issue price to the par value. Total bond interest expense is 163,705 yuan, which is calculated as subtracting 36,295 yuan premium from 200,000 interest payment. Over the 2 years, the unamortized premium gradually decreases to 0. Bond retirement at maturity. On the maturity date, the company should record both the interest payment and the principal payment as follows. December 31st, 2016, debit bond interest expense, 41,452 yuan. Debit premium on bonds payable, 8,548 yuan. Credit cash, 50,000 yuan. December 31st, 2016, debit bonds payable, 1 million yuan. Credit cash, 1 million yuan. This is the end of this lecture. Thank you for watching.